Hey everyone, I'm Mr. Roboto, and today I want to talk about identifying high probability setups that you can take at market open. One of the trades that I'll go over is a Tesla puts trade that I took last Friday, October 1st, 2021. So, why do I want to talk about this? Well, I went ahead and tweeted out after I took this trade, after I took the Tesla puts trade, hey, I'm waiting for the market to develop now. Puts at open was obvious. Joseph replied, hey, what did you see that made you want to buy puts at open? Well, it was obvious to me, but apparently it's not obvious to a lot of people. So I want to talk about what made this an obvious play for me. So this is how Tesla looked like going into Friday's market open. As you can see, there was this trend line that Tesla was trading on, and it broke through it on Thursday. Now, if we look at the after hours leading up into Friday, you can see this was the price action leading up into market open. Now, it's pretty obvious to me that we have a bottom trend line break right here, right? And then the price action in the after hours and in pre-market, we broke through, we gapped down in the morning, and then we went all the way back up and we retested this bottom trend line. Now this retest is a failure because look at these upper wicks right here, right? And because now that we're doing this sort of rejection going into open, and with the context of the overall market, QQQs at this time was pretty weak yesterday. This is why I thought Tesla puts at open was a pretty obvious play. If we zoom in on the 5-minute, now just because it's an obvious play doesn't mean you go and smack puts right at open. You still have to wait for this confirmation of this rejection. So this is how I played it at open a little bit more precisely. Again, we have this bottom trend line rejection. At this point, I'm looking for a 30-minute demand zone, or excuse me, a 30-minute supply zone. And then you find one. The one that I ended up using was this right here at open. This ended up being my 30-minute supply zone. And I simply played the rejection of this. If the price rejected through this, and there was continued weakness in the overall QQQs, then this was an opportunity to play puts. And that's exactly what I ended up doing. Right here. So if we zoom in intraday, how did I play this? So I saw that this zone did not get violated. We have weakness in the overall market. Once the spread on the puts settled, I went ahead and took contracts here, and then I ended up selling right around here when it met this previous demand zone that the price action rejected from, and the buyer stepped in pre-market. I sold around here, but still a very good trade, a very obvious trade if you know what you're looking for, and you're just looking for these patterns. You're looking for sort of patterns that you can play. I love playing this break of a trend line and the retest pattern, especially if there's a lot of volume on the breakdown. You can see a pretty easy trade, pretty low risks trade. You take it here, and then if it breaks above this pre-market high, then you stop out, and that's the end of the trade. But I think it's still high probability, low risk, and you have a high reward option or a high reward in this trade if it goes your way. I sold it early, but you could have brought it all the way down to this 30-minute demand zone had I been targeting this. So again, very small, very short video, but I just wanted to show you guys how I sometimes look for high probability plays to take at market open. This play had a lot of things going for it. It had this bottom trend line break. It had this retest failure coupled with the weakness in the overall market. This was just an A+ trade for me, and it ended up working out. Thanks. I'll have a lot more of these short videos coming out, very quick tidbits, but I think it can help a lot of people. And if you haven't followed already, my Twitter is Mr. Roboto Trades, and stay tuned for the next video. Thanks.